want to get a real good read on this market, you need to watch oil because it's a clear barometer of the global economy and also because energy costs have become a major component of inflation. But the thing about the oil market is it is prone to hysteria. Earlier this year, when Russia first invaded Ukraine, the price of crude skyrocketed past $100, trading all the way up to $130, and we never stopped hearing it was headed inevitably to $150. I heard a person say $200. Then when crude peaked over the summer, you heard a lot of people speculate that it might be headed for a hideous meltdown, although there were a ton of bulls who stuck with it. Now, though, it's been trading in the 70s to 80s, right, for the past few months, and it's time to ask if the overall dynamic in the oil market could be ready to change. You're starting to see some of the most recalcitrant bulls cut their price forecast, like Jeff Curry from Goldman Sachs, who took his fourth quarter Brent crude price target from 110 down to 100 yesterday on worries about the global economy, especially China's never-ending lockdowns. But when it comes to commodities, we like to go off the charts with the person who's been the most right. I mean, by far. That's Carley Garner. She is so brilliant. She works as the co-founder of Carley Trading, and she's also the author of Higher Probability Commodity Trading. She's my go-to person on charts when it comes to oil. She predicted the peak in oil over the summer. Ever since all things energy spiked after Russia invaded Ukraine, Garner told us to stay calm, approach the oil market rationally, like the irrational people call them for $200. She told us repeatedly that these triple-digit prices earlier this year were just temporary. At the time, everyone was acting like Russia's massive oil industry had pretty much shut down because of the sanctions from the West. But Russia never stopped pumping. They just found different customers, selling their crude to India and China. You take away the worries about a major supply disruption, and there was every reason to expect oil would come right back down to where it was trading even before the war. You know what? I thought that was an incredible call. One that I bet Curry wishes he'd listened to. But now that oil's more than round-tripped its Ukraine-related gains, where does it go? Where does Garner think is next? For the first time in a while, she's saying that while there's some hope for the crude oil bulls ahead, but she also says there's going to be some near-term turbulence before oil puts in a true bottom. So why don't we start with the turbulence? Take a look at the chart of the seasonal pattern in West Texas Intermediate crude. This is how oil historically tends to behave at any given point in the year. All right, you can see this the oil market in Thanksgiving. They have what I call a tumultuous relationship. This week of the year tends to be pretty darn ugly for crude, something Garner's had to learn the hard way. Historically, some of the most devastating oil declines have occurred on or about Thanksgiving Day. Yeah, let's take last year. She points out that the oil futures fell $10 on the Friday after Thanksgiving. Luckily, this was only a half day. Otherwise, the damage might have been even worse. Now, if you go back a little further, crude dropped 10% in Thanksgiving week of 2018, and in 2014, it tumbled nearly 14%. This is not a coincidence, according to Garner. The problem with Thanksgiving week is that's when we get the last trading day for the December oil futures. Oil trades mostly in futures. At the same time, it doesn't help that there's always an OPEC meeting in late November or early December. Throw in the fact that holiday weeks tend to have very light volume, and that means any moves tend to get blown out of proportion because it doesn't take much to move a commodity or a stock, frankly, during these lighter periods. But you can't underestimate the mechanics of the futures market. This year, yesterday, the 21st, was the last trading day for December oil futures. And these moments of future expiration tend to produce a lot of volatility. Specifically, Garner says they exaggerate whatever trend was already in place. Put it all together, and you can often get a recipe for a disaster in oil. And this year, the pain might last a bit longer. Why? First off, this year, the OPEC meeting falls on December 4th, so the uncertainty could extend past Thanksgiving week until we get the big bad event behind us. If OPEC agrees to boost production, that's bad news for the price of crude. I don't think it's going to happen, but anyway, there it is. Second, Garner expects a lack of liquidity here through the end of the year, possibly beyond, which puts downward pressure on everything. Once the dust settles, though, and get this is what's really interesting. She sees real hope for the oil bulls. How come? Well, while Thanksgiving week tends to be ugly, it also usually marks the annual bottom. Crude tends to rebound hard through December and January, which is what I'm thinking about. I'm thinking about this part, okay? I'm thinking about the future. According to Moore Research Center, Inc., there's a terrific seasonal buy signal for oil on November 29th that extends through the first week of January, okay? Now, specifically, if you went long oil on November 29th, right, we're getting up to near that, but it's not here yet, then held it through January 5th, you would have had a winning trade in 12 out of the last 15 years. That, to me, is good odds. More importantly, check out the daily chart of West Texas Intermediate crude. You can see oil's been taking it on the chin of late, although today it managed to give us a nice bounce. While Garner's feeling more sanguine, she warns against trying to be aggressively buying post-Thanksgiving dip here. As she sees it, oil's got a floor of support at 75. You see there's the support right there, okay? And down from about $6 from here. And if that level fails to hold, she'd expect a quick move down to the next floor at 70. Maybe even 65 if things get ugly. I'm not so sure about that. Remember, the president has said he's going to buy oil right here, that he sold right here. Perhaps the best trade the president's ever done, not that he's ever traded. Sell the Strategic Petroleum Reserve here and then buy it back there. That is a joke. I'm not political. But once the price of crude gets closer to 70, Garner thinks you need to pounce. Why? And if it falls to 60, she'd be all over her hand or her fist. I think part of it's because, although she didn't say this to me, that, hey, President Biden wants us to be able to be a buyer. That's what has to happen. All right, why does she want to go more positive? In large part, because she thinks the sellers will soon exhaust themselves. Typically, the pain stops when there's no one left to sell, because everybody who is going to get out has already done so. If you wait for the underlying fundamentals to turn positive, you'll miss the best part of the move. You have to wait. You have to watch for that moment of capitulation. Now, I still think we are at it. She's less bullish than I am. But that's when things get really ugly. And that tells you the bottom's at hand. Now, when we go over this piece, candidly, I felt that the bottom's here. And I think she's saying here. And I don't want to miss for the forest for the trees. I think anywhere around there is good enough. Here's the bottom line. The charts as interpreted by Carley Garner suggest that most of the selling in oil has already occurred. But she thinks there could be one last washout from this week, possibly early through December. And then that washout could take crude down to the low 70s or even the mid 60s. Once we get there, she believes that could be the mother of all buying opportunities. Moab, one of our biggest oil bears, is getting ready to turn bullish. Not yet, but likely in the next couple of weeks. You know what? I have to tell you, for members of the investing club, this is important because it's a big reason why we've kept some of the oil stocks in the charitable trust. And ideally, and you should become members of the trust, of the club, we are going to want to buy more into this period. And if you're not a member of the club, you won't know what we're buying or when. Hey, let's take some phone calls. Let's go to Tony in California. Tony.
Hey, Cramer. Happy Thanksgiving to you and the staff.
Right back. Oh, the staff's having a giant Thanksgiving party without me. I looked at my executive producer's having a fantastic party that I was not invited to. It's a family party, but who cares? She's family. Let's go to work with each other. What's up?
Okay, well, thanks. I'm thankful this year for your help and helping me get retired and making some mad money.
There we go. That's what we want.
Really good. Okay, I want to hear about how you feel about Pioneer Natural Resources.
I went with Jeff Marks, who is, of course, my compadre with the trust, and I said we've got to buy more Pioneer. We do not have enough Pioneer. He wants us to be able to make it so that it makes a difference when we buy, but I think Pioneer is my favorite oil right here, right now. Thank you for the fine comments. Let's go to Greg in Oklahoma. Greg.
Jim, booyah from Oklahoma. How you doing, man?
I love Oklahoma. I'm doing great. How about you? What's up?
Great. Thank you for taking my call. What's your thoughts on Devon? I know you've talked
Devon
about
is
it
so
on
well
and off.
run. You know, of course, Devon is Oklahoma. They've helped to build that beautiful art collection, University of Oklahoma, which has the finest French Impressionist collection in the country, and other than a couple of art museums around here. And I will tell you, I think that Devon we will rebuild the position if it gets back to 64, 65. All right, the chart suggests that there could be one last washout in oil through early December. Once we get to the low 70s or mid 60s, that could be the mother of all buying opportunities. I am saying I don't think it gets that low. Much more mad money yet, including my exclusive with Wabash. Could the transportation company transport some gains into your portfolio? I'm getting the latest from the company's top brass. Then, what does a lemon have to do with Jay Powell? Yeah, right in front of you. And him, I'll reveal. And all your calls rapid fire in tonight's edition of the Lightning Round. So stay with Cramer.